Hey guys, my name's Chris and this is Financial Fitness. And 4 months ago, I got on here and I was telling you, I was trying to decipher the caca that comes out of Jerome Powell's mouth. It's called doublespeak to be exact. And I'm gonna roll a little clip and let you see what he was saying then, and then we're gonna talk about what he's saying now. Try to see what's up. Let's go.
The concept of transitory is really this. It is that the increases will happen. We're not saying they will reverse. That's not what transitory means. It means that the increases in prices will happen, so there will be inflation, but that the process of inflation will stop, so that there won't be further. When we think of inflation, we really think of inflation going up year upon year upon year upon year. That's inflation.
Here's what I think of when I think of inflation.
When you have inflation for 12 months or whatever it may be, I'm just taking an example, I'm not making an estimate, then you have a price increase, but you don't have an inflation process. And so part of that just is that if it doesn't affect longer-term inflation expectations, then it's very likely not to affect.
This is also known as the Chinese river trick, because I can't understand a word he's saying.
Doublespeak is language designed to evade responsibility, make the unpleasant appear pleasant, the unattractive appear attractive. Basically, it's language designed to mislead while pretending not to.
What line of work are you in?
Waste management consultant.
The process of inflation going forward. So what I mean by transitory is just something that doesn't leave a permanent mark on the inflation process. Again, I don't mean that producers are going to take those price increases back. That's not the idea. It's just that they won't go on indefinitely.
There's nobody suggesting inflation. Nobody, no good economist anyway. Don't listen to them, they're lying to us. It's on the way. We don't know if it's inflation, deflation, stagflation, shrinkflation. It's inflation. It's just some kind of inflation. But it's not tranny inflation, that's for sure.
Nobody's suggesting there's unchecked inflation on the way. No serious economist.
Okay, so yesterday he came out with another speech about how we've got inflation. Just like I was telling you. So let's hear some more lies and propaganda that they've whooped up on a teleprompter that he is reading off like he cares. Let's go.
At the Federal Reserve, we are strongly committed to achieving the monetary policy goals that Congress has given us: maximum employment and price stability. Today, in support of these goals, the Federal Open Market Committee kept interest rates near zero and updated its assessment of the progress that the economy has made toward the criteria specified in the committee's forward guidance for interest rates.
Okay, they're setting us up. The economy is doing better, and we need to raise interest rates to shut it down. But what they're not telling you is the economy is built like a house of cards. It's fugazi. It's smoke and mirrors. 2/5 of all spending is stimulus. So let's just keep going. Wait till you get to the excuse.
Notwithstanding the effects of the virus and supply constraints, FOMC participants continue to foresee rapid growth. As shown in our summary of economic projections, the median projection for real GDP growth stands at 5.5% this year and 4% next year. Amid improving labor market conditions and very strong demand for workers, the economy has been making rapid progress toward maximum employment.
That's enough of this garbage. This is called doublespeak. It's when, and these politicians are the best at it. And he is a politician, whether you like it or not. He is elected by the elite to say these words to confuse you and think everything's okay. Just know that's what he's doing. And this is, I'm gonna write BS on this hammer. This is the BS hammer. And when it drops, the BS stops.
Job gains have been solid in recent months, averaging 378,000 per month over the last 3 months. The unemployment rate has declined substantially, falling 0.6 of a percentage point since our last meeting.
0.6%. That is dramatic. This is garbage.
In addition, some who otherwise would be seeking work report that they are out of the labor force because of factors related to the pandemic, including caregiving needs and ongoing concerns about the virus. At the same time, employers are having difficulties filling job openings, and wages are rising at their fastest pace in many years.
Why would that happen? Why would wages be going up in the fastest pace in many years? Because of crazy quantitative easing, also known as money printing.
How long the labor shortages will persist is unclear, particularly if additional waves of the virus occur. Looking ahead, FOMC participants project the labor market to continue to improve, with the median projection for the unemployment rate declining to 3.5% by the end of the year.
Every little thing is gonna be all right.
Compared with the projections made in September, participants have revised their unemployment rate projections noticeably lower for this year and next. Supply and demand imbalances related to the pandemic and the reopening of the economy have continued to contribute to elevated levels of inflation.
It would never be money printing. It will never be that. They're never going to say it. It's going to be because all the other reasons. That's the point. The next time we hear this stuff, there's going to be more inflation, and it's going to be something else. It couldn't be what we're doing. It couldn't be, the economy is not well. It's not what a good economy does not take $1 trillion of stimulus a month. Remember that. And when it goes to $2 trillion a month and then $1 trillion a week, that's when we experience hyperinflation. Other countries are already starting to notice it. Russia and China, they're doing business outside of the dollar. Those dollars are coming back home. That's a 40-pound chicken coming home to roost, and that's a big chicken.
In particular, bottlenecks and supply constraints are limiting how quickly production can respond to higher demand in the near term. These problems have been larger and longer lasting than anticipated, exacerbated by waves of the virus. As a result, overall inflation is running well above our 2% longer run goal and will likely continue to do so well into next year.
Next year will be better. Blah, 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 yeah. Don't listen to them. Prepare now. Get your precious metals now. They're down. When they double is not the time to start buying them. And that's when most people will. I know a guy that bought at the top of the silver market, and he is a crazy good investor. I know him personally. He bought a monster box at $50 an ounce. But that's the kind of, you don't know when it's going to stop. And this time it might not stop till it goes to the moon. And then you got it. You got it in case something happens. In case your check doesn't come in for 2 or 3 weeks. You've got it there. No, you don't want to spend it. I get it. But at least you're not going hungry. And if you've got it in cash, and they're printing that stuff all the time. According to Jerome, they're not going to do it anymore. So here's my prediction. They're going to raise interest rates. They're going to taper. And they're going to slow the economy down to a crawl. They're going to whoop up a bunch of funny money. And then it's going to create more wage increases, more of the same. Everything's going up more. Another 50%. We'll be up 100% from the last video he did 4 months ago. The first quarter of next year is going to be extremely interesting, and the second quarter is going to be scary, scary, scary. So there's this guy rambles on forever, but I really just want y'all to know what's going on, and that's my take on it. And if you think I'm wrong, please let me know in the comments. This is Chris. This is Financial Fitness. Pay attention to him. Like and subscribe. Ring the bell. I'm going to keep an eye on him. I'll see you tomorrow.
Then the message said, end of message.